Good morning, Steve Freight in Chicago with the morning grain comments. Well, we're post USDA August report. It's Friday the 13th, and I hope everybody has a safe and fun weekend. Overnight prices are higher, led by the soybeans. Corn has managed to gain from the overnight lows, and wheat is higher. I think that number one, there is some talk that China came in and bought a few cargoes of U.S. soybeans overnight, and maybe somewhere between 300 and 500,000 tons of U.S. corn. I think that's sparking a little bit of rally. As far as the USDA numbers are concerned, in the corn market, they did lower the crop more than expected here in the U.S., and they lowered the carryout. But at the same time, they lowered demand. And so it seemed like they wanted a carryout number of 1,200, and they backed into that on the demand side after plugging in the new crop. Many people think that the Brazil corn crop, while being lowered, is still going to go lower, and that final U.S. corn exports might be 400 million bushels higher than USDA, which would put the carryout somewhere around 850, which suggests post-harvest, probably you'll see corn trade over $6. As far as the wheat market is, it was probably the most surprising numbers. The USDA dropped the Russian and Canada crops as low as what the analysts thought they should. And that brought the world export wheat stocks to usage ratio at record low. U.S. spring wheat crop could still be a little bit lower. And now the big question mark is that what is the Russians going to do as far as export tonnage and export prices? Still seeing some delays in the Europe crop, and some of the USDA Europe numbers might be a little high as far as exportable wheat supplies. And then we'll just have to see what the demand is going to be as COVID spreads around the world. The 22-23 wheat acres need to go up at least 2 million to avoid that year's carryout to drop below 500 million bushels. Here again, people are talking about that Feb period wheat prices testing $8.50 to $9. In the beans, it seemed like they did kind of the same thing. They wanted to have a 160 carryout or 155. So they had the carryout, they had the crop size, and so they dropped demand in both crush and exports to meet that carryout. The key will be China and how much demand they're going to take as far as bean imports, and whether their hog herd numbers will continue to grow, and if their ration is going to include protein or more feed grains and things like that. So the soybean market has good support in November at $13. And some people think that prior to next year's South American harvest, we need to test maybe something over $15 in the nearby soybean futures. USDA did drop biofuel demand in soybean oil, which has offered a negative bias to soybean oil values. Finally, from a weather standpoint, we're probably going to be dry for the next 5 to 10 days. Then there could be some showers in the western corn belt. The first outlook for the winter is cold, with maybe some above normal precip in the northeast, but continued dry in the west and southwest. La Nina could kick in South America, which could delay some of their corn and soybean plantings. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.